Hello traders, welcome to another video presented by yours truly, FFT Trading. It's a beautiful Saturday morning where I'm at. I hope you guys had a killer trading week and I hope you've been enjoying the weekend thus far. And in today's video, I'm going to teach you how you can compute really effective multi-time frame analysis. In some previous videos, I've been talking about how you don't need this much to be successful in trading. You can be very simple, very yada yada. And whilst that's also true, it doesn't mean that multi-time frame analysis or looking at higher time frame levels is somehow bad. It's absolutely not true. Looking at higher time frames, in my opinion, will always provide you with higher accuracy at certain times. However, it doesn't mean it's the be-all and end-all. So yeah, let's get into it. So we are looking at pound USD, and let's start off looking at the daily time frame. Now, the first thing that you guys are going to have to be very aware of is that in order to compute multi-time frame analysis correctly and effectively, and what I mean by that is provide good trading results, because just drawing out a bunch of levels and a few trades here or there winning, but overall it's not providing you with great results, isn't, in my opinion, effective and correct. So I'm going to show you how, I'm going to show you very, very simple ways how you can take phenomenal trades every single time from these things that I'm going to teach you. Doesn't mean it's always going to win, but what I will promise you is that if you backtest what I'm telling you very, very down to the T, you will start to see very good results. And that's all I'm here for, just to improve your guys' results. So 3 things you're going to have to watch out for is, let's look at trends, okay? Then we're going to look at key levels. And then the last thing we're going to look at is not looking too far to the left, okay? Because this is a very big problem. Not looking too far to the left. This is a very big problem that I see many traders make, and also once upon a time I would also make this mistake. So one thing that I will always ring true is, for example, if we are looking by here, we are really not interested in levels such as these, and levels such as these. What we will be interested, however, is probably some of the major levels. So a level like this would probably be important, because if you were to go to a higher time frame, then this would probably be a monthly level, a weekly level, and as you can see here, these are what's important. So what I'm about to show you, you can use it from any denomination, but we're simply going to go with 3 time frames, and we're basically going to go in a lower denomination every single time. So I'm going to just show you how you can basically compute this kind of analysis, and then how you can get your entries. So let's start off looking at trends, okay? The first thing you're going to have to really identify is how you identify when trends are forming. Now, majority of us will say when prices in an uptrend is making higher highs and higher lows. Downtrend is making lower lows and lower highs, okay? And we can also know when price is not trending, because it is ranging, okay? So this is what you're going to really have to look out for, and you're really going to have to gather some really good information as to what point of the trend the market is in. Something that I like to call market flow. Okay, basically seeing at every single point of this move where the price is pushing up here, retracing, pausing for the further continuation, the break of the level. Every single thing is important, and this is something that I will go further in a different video. But let's keep on going. So once you've identified the trend, then you are able to gather some really good evidence as to where price is going to be going. So let's look at this particular situation, okay? We can see the price has been traveling down, making lower lows and lower highs. It broke this high by here. At this point, the trend has shifted, and now we are forming higher highs and higher lows. We do have this significant level by here, which price has failed to break up many, many times. And in this situation, right, this is simply, in my opinion, just the trend defining point, which is where price will be respecting this level and the trend is still intact. Okay, so you can see the price has been doing a bunch of hoo-has. Okay, it's kind of just been coming all around by here, dancing up and down, kind of doing this. But this doesn't change from the fact that this scenario, okay, this bit of information is simply just this. Okay, so price kind of broke by here, kind of came back, and that's all it's really done. So you could gather that this is a pretty big consolidation. We can see the price is traveling down, and where is price likely to travel to? key levels. So if you are on the daily and you can see that, well, we are potentially still in an uptrend. This is a very key level because this is a trend defining point. It's a previous high or low in an uptrend, and price has also bounced from this level. Now we can start to look at how we're going to take entries. Okay, so depending on how you guys trade, you will plot your key levels a little bit different to me. You might not be as patient as me, or you might be a little bit more patient than I am. So I like to take trades. When I take key levels, I like to basically see some wicks. I don't like to be too stringent. I don't want to say the key levels by here. I want to do something like this where I'm going to get quite an accurate sort of result. So I'm going to simply wait for price to do a few things, okay? If I can see that if I think that price is going to bounce from this key level, then we're simply going to wait for price to bounce at the key level, right? So we can see that price has, let's do this by here. Okay, price has hit our key level, and now what are we looking for? Okay, let's go to the next denomination, which is the 4-hour time frame, right? So now we're at the 4-hour time frame. We basically want to see, is price going to show us some kind of indication that it's going to bounce? Now, I know some of you might be thinking, well, this is a downtrend. Why are we going to be buying in a downtrend? Well, we're not buying in a downtrend because our initial bias has come from the daily time frame. So if we expect a bounce from this level, what we don't want to see by here is just price forming very strong bearish candles. So we're just looking for some kind of indication. Okay, we can see, okay, so we got this little bounce by here. Fantastic. Now we're going to go to the 15-minute time frame and see what the structure is looking like. Okay, we can see that a lot of things are lining up now. We've had this break above this wick by here. Okay, so price is showing us that we've got some bullish sentiment in the market. We can see that it's broken above, right? And now we want to see if we can take some trades to the upside. So let's go ahead and stick our our entry around here. Let's put our stop loss below some structure, set it by here, and let's just go for a nice 1 to 2. We're not going to be too greedy. We're just going to see if this trade will play out in our favor. Okay, this has all come down from the higher time frames, and let's keep on going. This is taking a while. Right, so we're in this trade for a little bit of time. Okay, let's just go by here and see where price wants to go. Okay, so eventually it did ping off, and this was all coming from the daily time frame. But this doesn't stop by here, okay? Because we already had this initial bias from the daily. Now we're going to basically be saying, okay, what's the next play? Well, if price is going to form that structure where it's going to be making higher highs and higher lows, okay? Yep, so we're going to expect price to potentially travel to these key levels, okay? But the other thing that you got to be very careful about with multi-time frame analysis, is that you can't be too married to a position or a direction. So one thing that I like to do, and some of the people that I've taught how to trade, is that when you've got a bias from the daily time frame or any time frame, right? You always have to consider the possible options, because I would look at this and say, well, even though I do expect price to rise to this major level, price can just do whatever the hell it wants to do. It can mess around, it can F about, it can do whatever. So you can't be too solid in your analysis. If you're looking at something and you have a certain bias and nothing is lining up and there's no reason for you to take a trade, then just don't take it. Simply just don't take it. But what that doesn't mean is that if your bias has potential to change, as in you see situations happening on the chart which goes against your initial bias, but it's making sense that price is going to go into a different direction, then you can go ahead and take that trade, right? So let's just practice that by here. Okay, so I'm expecting now price to rise to this key level, so my initial bias is bullish. Let's go to the 4-hour time frame and do the exact same thing. Okay, what am I seeing on here, right? So price has pushed, it is at this key level, right? Let's just delete this by here. And we've seen these 2 wicks by here. Okay, this is showing me that price is stalling by here. It's not giving me any strong signs that it's going to drop. So let's go ahead and go to the 15-minute time frame and see if we can take some trades from some nice key levels. Let's go for a simple 1 to 3 if we can. If the stop loss is really big, then we may just have to settle for a 1 to 2. Okay, so looking at the 15-minute structure, we can see that this is our previous higher low. This is the high that broke it. So this is a very important level. We do have some key levels by here. So the two places that I'm going to take trades from, well, I'm going to take a trade from here, keep my stop loss below this level because this is the safest place. But I'm also going to be seeing if I can maybe take a trade on the breakout. Okay, so let's wait and see what price wants to do. Okay, so price did break out. Is it going to give me a nice retest? Okie dokie. Well, it dropped down by here. So this is looking a little bit sticky. We don't really want to be buying at this situation. We want to be buying when we have a lot of confirmation that price is going to sort of rise. Okay, so now it's kind of doing whatever. Okay, perfect. Now this looks lovely. We've got a nice bullish break. We're going to probably put our stop loss because it's broken above here and we formed this little bit of structure. We can, if we wanted to, put our stop loss by there, but we just have to remember that this isn't the safest place. And if we take a loss here, it's not a bad trade. It just means that, you know, it is what it is. So let's go ahead and see how that plays out. Okie dokie. So we got a stop loss by there, no problem at all, right? But does this mean that our bias is completely invalidated? Absolutely not, because look what's happened, right? Price has come back to retest that nice key level that we had previously, okay? So we simply just go again, right? Let's go ahead and just delete this level, right? Sort of move it up by here, make it a little bit more accurate. Okay, we can see that the 15-minute rejected. Let's keep our stop loss below this level. We've got a much nicer target now. We did take a loss, so let's not be greedy and let's just go for another 1 to 2. Okay, bang, bang, bang. If you wanted to go for a 1 to 3, you absolutely could have. Now, you might be thinking to yourself, well, why is it that price broke above here, okay, broke, you know, this would now be our trend defining point. You're absolutely right if you would be saying that, okay? However, in my personal experience, when I'm taking losses, right, I always want to be super, super careful, okay? If I can, right, well, we can actually see that price did, in fact, react to this level quite perfectly, okay? You can see it literally matched up perfectly. But for me, putting my stop loss by here is just a little bit too risky, okay? Like, look how small that is. So what you could do is, right, for me, I want to put it behind some really safe structure, or you can maybe put it behind this, right? You can see the wick rejection, right? You can put it behind here, okay? So it's just some very, very simple stuff there. Let's go to another pair and let's look at something a little bit different, okay? Let's go ahead and use another example and go to the 1 hour time frame, okay? Using the exact same concept, let's just go all the way back, okay? Let's first of all decide and see whether this is, okay, we can trade this. It's a little bit messy, but let's use that exact same analogy, but we're going to use the 1 hour time frame. And then we're going to go down to the 15-minute and the 1 minute. Are we able to go to the 1 minute? No, we're not. Okay, let's delete this and let's just go to some recent price action because we won't be able to get some 1 minute trades. Can we get the 1 minute there? Okay, fine. Okay, so again, using the exact same concepts, we're going to basically see where price is in the current trend. We can see on the 1 hour, it's forming this downtrend, key levels, okay, very undecided price action. Let's just wait for price to do something. Okay, lovely jubbly. This was something, but I don't think we can take a trade by here. Is this something? Let's have a look. Okay, so let's be honest with ourselves, right? I know this trade will probably lose, but let's just be honest with ourselves. We're not here to just show winning trades. We're here to just show concepts. Okay, so price has broken lower. Let's look at the 15-minute. This is our main initial bias. Okay, price has broken lower. We now want to see what the 15-minute is doing. Okay, we can see that the 15-minute has also broken lower. Let's go to the 1 minute and see if we're able to take some price action. Take some trades. Okay, we ideally want to see a further continuation down by here because, and this isn't coming from the fact that I saw price going up, this is genuine truth. When you have initial bias, you want to, like we saw in the previous video, you want to see price coming back to some sort of key levels, okay? We can see we got some key levels by here. In my opinion, this is not a key level, it's just too small. We got a key level that's also by here, right? So we want to take trades at these levels, okay? However, because price has formed this small uptrend, we're not looking to take trades by there, okay? We want to see price come back. Okay, so this is just doing too much. Price did in fact break in, so no trade there. Okay, price has come back to this key level right by here, which is now giving us better signs to go in. We check the 15-minute, see what that's doing. Fantastic. It's giving us all the right signs. We've got a nice momentum candle. The 15-minute is closed. Let's go to the 1 minute and see if we can take some trades. Okay. We're going to wait for some kind of a break, or we're going to wait for price to come back to a nice key level. We got a break. Let's go ahead and take a nice little retest by here. See if price wants to come out. To be fair, we could just take the entry by there. Put our stop loss by here. We're expecting price to make a lower low. So let's go ahead and set a nice 1 to 2 and see what the hell it wants to do. Dum dee dee dum dee 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 do do dum dee dee dum dee dee. Still going, it's still going. Don't you dare reverse on me now, you silly man. Please, please, please. They're gonna laugh at me if the trade loses. No. So close, bro. Come on, just give me a little. Ah, wait. Oh no, is that news? Oh, damn it. Okay, fine. Yeah, that would have been news. So probably likely you wouldn't have. Some of you probably would have your little gamblers, but it's better for you to just close that trade out. Okay. So let's go ahead and look at another example. Okay. Boom, 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 boom. Let's go to 6 a.m. one more time because that's the time that I trade. Okay, what are we looking at? Well, what I can see is that we got a downtrend and price is continuing. It wants to probably push, and form this pattern where price is at currently. We can see that it's pushed, retraced. That's, this retracement. It's come back down. Okay, it's retraced and price is kind of by here. And we basically want to see price from this point push downwards. Ooh, okay, I hope that makes sense to you all. So we're just hoping that price will form this pattern, right? So for me, everything's looking good to go. 15-minute is traveling down. Let's go ahead and go to the 1 minute. It's already broken lower. This is bloody fantastic trading, okay? Take the trade right by here. We don't even really need to wait for the retest. Look at the stop loss, 4 pips. It's a banging trade. Let's see if we've got room to go to the next key level, which is down by here. Let's sort of make that a bit here. Let's put it by there, okay? And let's just see if we've got room for it. We got a nice 1 to 2, 1 to 3. Come on, let's go for 1 to 3. This is a banging trade in my opinion. Come on, come on, come on, come on. Oh, what's it doing, bro? I think it probably will be stopped. But whoop. Hey yo. Hey yo. Okay, this kind of multi-time frame analysis thing is kind of working out. Yeah, so again, guys, if you didn't want to take the trade there, you could have taken your trade up by here. Nice double top. I mean, that's beautiful, beautiful trading. So go ahead and study that, guys. High time frame, middle time frame, and then entry time frame. Okay, everything just needs to line up for you. Okay, you want to see where the trend is, right? As I've already explained, go and watch my market structure video if you're not too sure about how to identify trends. Look at where price is in its current trend, and you're going to basically take your trades off those key levels. And then once you've found your direction from the higher time frame, scale down to a lower time frame. Just see if you've got the signs right there. It doesn't need to be like perfect, doesn't have to be like in this crazy trend. It just has to be looking good for you. As long as it's not looking bad for you, then you've got something to work with. And then on the entry time frame, you're just looking for your entries, your retests, your breakout trades, your double tops, your whatever it is. But for now, guys, I'm going to log out. Please like, comment, and subscribe. It helps me out massively. If you thought the video was great, then leave a comment. If you thought it was shit, then leave a comment. Tell me how I can get better. And for now, guys, I'm going to log off. Hope you guys have an amazing weekend, and I shall see you on Monday. Take care for now. Bye-bye.